So, US economy. I mean, for God's sake, man, this thing is so resilient. It's unbelievable. Data's come in. Retail sales, wonderful. Unemployment claims, down, wonderful. So now Powell does really have a point. Got to keep the rates high if the economy is sustaining itself, given that the economy doing so well does put inflation at risk of going up again. You shouldn't have done your tariffs, Mr. Donald Trump. I'm just losing my words. Listen, I've got a wonderful headache today. So if I'm stuttering or not getting my words out clearly, it's just because I need to slow down my thought process. But I think at 1,000 miles an hour, you probably all do yourselves. But anyways, that's irrelevant information. What we're talking about today, stock market crash. Why is it not done yet? Look. There's been a rotation, or a rotation is happening right now in certain sectors. You had great news yesterday from the banks. You even had the Taiwan semiconductor manufacturing company come out with an astonishing, smashing earnings per share and profit. Those guys ain't stopping. Just goes to show that AI is very demanding right now. But they too have kind of scaled back on the growth prospects, similar to ASML. Both big heavyweights in the AI sector or the semiconductor business have both stated that they are seeing that tariffs could be a bit of a problem as we head into the fall. And that's when they're expecting the tariffs to come into play. So what we know is Trump's now put out 25% tariffs on Japan, and a deal with India is coming into play. But what are we talking about today? Today, I'm going to give you the breakdown on why Bitcoin could be in line for another move to the upside based on a couple of metrics. And we're going to dive into that just to give you guys the understanding of what to expect when you see Bitcoin pulling back right now, and is it getting primed for another move to the upside? So with that being said, ladies and gentlemen, let's get with the program. I'm going to keep this live short and sweet again, and let's just break down what we can expect by the end of today. Let's get with the program. This long-ass introduction, man, for God's sake, get on the live, man. Here we go. Stocks are rising, of course, because Donald Trump kind of pulled back on the idea of trying to fire Powell and called it a concept. But now that's out of the way, what's really the focus point right now? Look, data's come in. 0.5%. Let's just zoom in and have a look at that. Here we go. So expectations for the core retail sales came in at 0.5%. They wanted 0.3, contraction at the minus 0.2 on the last reading. Then retail sales month on month came in astonishing 0.6%, and they projected 0.1%. Unemployment claims came in at 233 on the expectation. So lower than expectations, but great news because your US economy is doing great. And there's the proof of it. Even better, Philly Fed Manufacturing Index came in at 15.9. And now I'm saying this now. I really believe that manufacturing indexes that we've been getting so far are all going to reflect the idea of what tariffs could be like in the future. Remember, core durable goods came in and absolutely smashed it. They expected 8.6, came in at 16.2, there or thereabouts. And that's only because companies are rushing to try and just pick up whatever product that they can. If they're going to go and sell it on, they want to try and lock in certain prices so that in the future, tariffs are not a problem for them. Now, with that being said, you can see clear as day that this right here is enough data for Powell to say no to cuts. And that's the truth, ladies and gentlemen. Let's put it into perspective. Look at your bets now. Rate swap traders are betting that there is a 44.1% chance that rates are going to stay at 4.25, 4.5%. Do you know what this was at the start of the week? 33%. Look at it go up. 44% now. So the expectation is that based on the data that we've been getting, the US economy is very resilient. It can absorb these rates of inflation, which effectively means that the Federal Reserve is going to wait to see what the impact of tariffs are going to be. Every single FOMC speech that Powell comes out with, he goes into dive in the idea that we're waiting to see if tariffs are going to be inflationary. Is it going to be a problem? And based on the way the economy is behaving, looks like it's going to be able to absorb that. Now, when we look at the rate swap traders, this does fluctuate, but this is for September. And all these FOMC speakers have been coming out saying that they expect to cut the rates, but bet traders are not seeing that. 44%. And I do believe that the next bout of data that we do get, because by Friday, we're going to get the housing permits and, of course, preliminary consumer sentiment. That should pretty much edge enough of these traders to believe that we're going to be split on whether we're going to get interest rate cuts or not. Now, we're going into the start, well, halfway through the month, so we're still going to get some more data coming out, which is going to be based on the economy. So we just quickly go over to it. And you can see that as we go into next week, we've got Powell speaking, then you've got the flash manufacturing index again, and the services, and then you've also got unemployment claims. So then when we go into the start of the new month, that's really going to be edging the idea of whether or not this is going to keep on going higher, and they think that the interest rates are going to stay higher for longer. Now, let's just put things into perspective. You may or may not know that TSMC have just posted the quarterly profit on AI demand. This is massive. They've done very, very well. But again, they too are weary about tariffs. Is that stopping Nvidia? Come and look at Nvidia in the pre-markets, ladies and gentlemen. Check this out. Where are we at? Where is my stock? Here we go. Right, so Nvidia is gapping up at the open. Another all-time high for this stock. Currently trading at the open, well, just before the pre-markets at $172.51. Going into the dollar dominance. Dollar dominance. This thing, again, do not sleep on the dollar. I will keep telling you this. Don't sleep on it because this thing is going to keep on going up. All right? Because the longer the interest rates are higher for, the better yield that investors can get retaining themselves in dollars. And now is a perfect time to get into dollars. Why? Because your euro is strong, which means that you don't need many euros to convert to dollars to get a lot more dollars. Okay? So yeah, you might have purchasing power that's absolutely terrible on the dollar, given that you're at 98. Okay? But you've now got a stronger euro that's effectively going to give you more buying power based on the conversion of exchanging euros to dollars. Once the dollar keeps going up, the stock market is going to sustain itself and keep on climbing. Now, NASDAQ is doing great from the reversal from yesterday, and it's still continuing with its move to the upside. Just be careful. There is a green vector candle right there. But let me get to the point of what I'm trying to address in today's live stream. Is the stock market going to crash? There are two phases in the stock market, which is expansionary and contractionary. It's expansion, contraction, right? Expansion can be over a number of months. Just before the subprime mortgage crisis of 2007, 2008, the stock market was expanding at a pace of, and it finished at a 284-month expansion. Just kept on going up and up and up and up, okay? Then what happened? 2007, 2008, financial crisis, everything drops, and then the Senate passes a bill for $700 billion, cash infusion, and everything comes back up again. For every time the market crashes, an injection of liquidity comes into play. Now, this is where it gets interesting. I'm not saying that the stock market is going to crash today or next week. But what I am showing you in a minute is where money is starting to maneuver to. Check this out. Goldman Sachs. They released a report saying that hedge funds are dumping bank stocks and piling into one sector. Now, we know yesterday that, well, a couple of days ago, Warren Buffett had started to reevaluate his position in certain stocks. He got rid of Citigroup, got rid of that, got rid of his Bank of America position as well. And he's been getting rid of certain staples, okay, or certain bank stocks, should I say. And he's starting to go into the staples. So that could be utilities, or where it's energy, or retail and entertainment. Like, he's got a big stake in Domino's Pizza. I mean, when are you getting Domino's, ladies and gentlemen? If you don't want to go out and spend money shopping because the cost of buying food is too much, you're going to stay home and just order a pizza because they've got deals coming out left, right, and center. Now, imagine when you've got thousands of those outlets and everyone's doing that in different areas of the world, you can appreciate, or let's say the US, you can appreciate that in terms of share price, they're going to be doing pretty well. Maybe Warren is onto something. But Goldman Sachs is saying that they're going into other sectors. And one sector in particular, they're talking about the staples, okay? What are the staples? Well, it says here that hedge funds are buying consumer staples, which include food, beverages, tobacco, that tend to be insulated from economic downturns because they are essential items. What else is essential during economic downturns? Whether you like to admit it or not, ladies and gentlemen, people will still have diabetes. They will still need blood. They will still have operations. They will still need to go to the doctors. They will still take prescription medicine. So that means the medical sector is always going to be performing. What else do we need? Well, if all those people over there in the medical area are still being in work and they still need people to treat them and people are still sick, well, how are the people that are sick going to get there? Well, they're going to be using their vehicles, some form of transportation. And what do we need to get people to the hospitals? We need oil. So as long as oil and medical stocks, whatever happens, they will always be consumed during any type of economic story. Let me back this up. In front of you, I have got a list of ETFs that have been performing really well over the last month. This is in millions, okay? In the last month alone, Utility Select Sector SPDR Fund has come in with 859. A lot of flavor in that. iShares Global Infrastructure ETF, 379, okay? SPDR and S&P Biotech ETF, 304. iShares US Infrastructure ETF, 106, okay? This is in the last month, all right? In millions, okay? So what are we seeing? We're seeing that they are preparing for the future. And they're piling into these ETFs that are made up of utilities, infrastructure, and what have you, all the staples. Here is an example. Look at the BlackRock iShares Global Infrastructure ETF. Look at this. What's it made up of? You've got energy companies. Constellation Energy Corp. Who holds that? Who added to that this week? Buffett. Of course he did. And of course, Occidental Petroleum. Why is he going into that? But you can see that these are the companies that make up this ETF. And given that this is just a small one as well, like if I just go back into it, all right, and we look at the utility sector SPDR fund, and we actually dive into that and we see what that's made up of, given that it's had 859 million going to it, going to the holdings. Again, what do you see? Energy, Constellation Energy, again, Duke Energy, Vista Corp, American Electric Power, Sempra, Dominion Energy, all energy. Maybe people are starting to get themselves prepared for what is to come. Maybe oil's price is going to go up. Maybe there's going to be a tariff war. Again, what tensions can happen? Maybe when we get the Fed pivot, investors are going to be like, right, we need to start going into safer environments. The economy cannot sustain itself with this high debt deficit that Trump keeps on increasing. So we've got that logic with regards to why the stock market might not be done yet, because they got to position themselves. Go over and have a look at the dollar. You don't think that the stock market is going to be able to crash and you're going to have yourself a very cheap looking dollar. No. You don't think the stock market is going to crash when the bond market itself is not starting to move up. No. We need the bonds market to start going up because investors need to protect themselves. They need to come away from high risk. Where's the risk right now? It's in your stock market. Look at that. Stock bond ratio is clear as day, demonstrating that you have got stocks overvalued to the bonds. And whenever you see that ratio, it means that there's going to be a change in the value expectations of stocks versus bonds. Right now, it's expensive. But historically, it says that when you're buying at the all-time highs, you can actually sustain yourself some gains. But look at where we are from a macroeconomic perspective. Interest rates are still high, okay? And if interest rates are still high, it means that investors are still piling into dollars. Equally, if the economy is still sustaining itself and the labor market is fine, then whatever aspects of the economy are struggling, given that inflation is still high, investors are going to park that and say, you know what, well, let's go into risk. We may as well. Plus, we don't want to miss out on the opportunity of AI, given that companies like TSM are absolutely smashing it. So if investors can see that people are spending money, then it just shows the defiance and the resilience of the US economy from a consumer perspective as well as a corporate perspective. All right? So things are actually great. So going over into the smart money, dumb money concept, where are we with that? Well, smart money's still at a discount, but it's at an extreme. Retail is still at their hype. So they're all excited about things. Nothing's stopping this gravy train. Let's just now go into crypto and understand that logic. So right here, Bitcoin's rally may not be over yet. Crypto quant analysts see a 25% more upside. What's it making reference to? It's making reference to this chart right here. Short-term holder, market value, realized value. Okay, so basically, how much profit are these short-term holders in right now? And it says that Every time it comes up towards this region of around the 1.35, then that usually tells you that investors are going to look to start taking some profits. And only last week we had $3.5 billion worth of profit taken on Bitcoin's move to the upside, but we're on the assumption that we're still in line for a potential move to the upside. And Crypto Quant is coming out with the idea that they think 20 to 25% move to the upside is on the cards. But check this out. The boys have been selling again. Miners, they sold quite aggressively, all right, on Bitcoin claiming the all-time high. All right, so around the 123,000, 121,000 reach, just below the 120,000 zone. They managed to sell quite a bit of Bitcoin. You can see that from the spike up, and then it's come straight back down, even when it's trying to take another stab at the highs as well. So if the miners are selling, is that something to be concerned about? Well, no, not necessarily. It just means that every time Bitcoin hits a milestone, those miners are going to step in again. And you can see that they were anticipating that was going to be the case by not selling anything when Bitcoin tried to make an attempt towards the 110 mark. And then they stepped in as it started to break out, and then it cleared the highs, okay? But based on this chart right here, it's suggesting that short-term holders, who are made up of who? Your new whales. And where are they from? They're from the street, ladies and gentlemen. Wall Street. They're the guys that are taking advantage of this movement to the upside. So by that logic, it's saying that Bitcoin's going to move another 20%, 20 to 25% until the realization that profit taking is going to be taken is going to hit. So right now it's at 15%. That's where they think that profits are for these short-term holders. When it gets up to around here, that's when they're going to start really taking profits. Going into Bitcoin's price action, to put it into perspective, we can now look at it and say to ourselves, okay, from the daily time frame perspective, what can we expect? Where are we from a macroeconomic perspective? Well, look, Bitcoin's going sideways, and this stupid bill that hasn't been signed off yet. Has anyone seen that? I've not seen anything saying that they've signed off on it just yet. But today, Donald Trump is busy. Check this out. He's going to be having his intelligence briefing at 10:30 a.m. Eastern Standard. And then for some reason, it's not known about the time. It says 1 p.m., but Caroline Levette's going to be speaking later on today. Man, she takes the absolute piss when it comes to her having this discussion. They've got the live stream going, and it's just there continuously waiting for her. But anyways, that's irrelevant. 4 p.m. today, Trump is going to be signing executive orders. Maybe we could get the crypto bills that we really want signing off. Once that happens, ladies and gentlemen, it's just going to absolutely explode, in my opinion. And the only asset I think is going to explode is, of course, Circle. Going into Circle right now in pre-market, it is down -2%. And it's currently trading at $228.34, trading from a close of yesterday at $233. That did really well, and volume has come in quite significantly for this asset, okay? Again, don't sleep on this one, ladies and gentlemen. This one will be a long-term play, and I did say in last night's video that I expect them to give us a stock split on this one. So you heard it here. There'll be a stock split with this because of how much it's going at such a soon point in straight after its IPO. But because of the speed that companies are trying to get in on the stablecoin game, this is actually going to do very well, in my honest opinion. So keep an eye out on Circle, ladies and gentlemen. Quickly going back into Bitcoin, understanding where we are. So currently trading at 117,700 region itself. That green stopping volume candle is posing as a bit of a risk. Now we've got this, the yellow EMA, this yellow EMA, which is the 5 EMA by the principle of the hybrid system. Okay, so the 5 and 13 EMA are expanded right there. So we're effectively seeing that price is trading at that point. I would say that you've got to give Bitcoin a little bit of freedom in case it does decide to try and trade in between that point, and that's still good. You're effectively looking for this during an uptrend. Again, I'm making reference to this because that's a better example of what you need to be looking at. And when it comes to projecting price, you've got to say to yourself, what is developing? And if you can train your eyes to be receptive to what is developing, then you're going to get a good feel if the bigger picture of things is suggesting that maybe the market is going to continue higher. Okay. And then that will give you more confidence to say, okay, at that point in time, what was going on in the marketplace? Did we have any greatness going off with the ETF? Who was talking about Bitcoin? What was so exciting about crypto during that time, which then led it towards that all-time high of the 112,000 mark? Okay. The same thing could be happening right here, ladies and gentlemen, where it's starting to accumulate inside of this range because there is still profit taking coming into action in Bitcoin. But again, according to this right here, we're not done yet. So that means there are a lot of people and participants retaining their Bitcoin in preparation for the bill. The bill will get signed, But the time it takes for them to get it signed, you're going to see Bitcoin probably trading a little bit on a tricky side. Okay, so just don't get too excited. Wait till the bill comes into action, because once that happens, it's just going to be an influx of liquidity coming in. It could be a sell the news event as well, because, I mean, buying Bitcoin right now might be a little bit tricky for some people. But anticipate some form of a retrace in it, and ideally we want to see it just chill inside this 115 region and the 117 zone. That would be a nice happy medium for me. Going into the order flow. So you can see now interest is starting to come into play with Bitcoin. You've got bids to the downside, offers to the upside. And for those of you that aren't familiar with this, the pink area is where people want to sell, okay? The green area is where people want to buy. Now, when we go back into this article right here, this is what CryptoQuant had said. It says every time the short-term holders' market value, realized value has reached around 1.35, it has triggered profit-taking behavior. There is still room for Bitcoin to rise by approximately 20 to 25% before hitting that critical MVRV threshold again. What's the one thing that's going off here? They're expecting that when prices rise, okay, they're expecting it to rise because people are going to start taking profits. And how do you take profits? When you sell it. And that's being demonstrated right there. You don't take profits when it drops. Now, I'm talking a sustained drop. There is no one averaging their exit positions to the downside, all right? They're averaging it to the upside, because that's when you sell an investment, when it increases in value. If you're selling an investment that is decreasing in value, be realistic with it, okay? Yes, Bitcoin is pulling back, and that fundamentally means that you're selling as it's dropping. But if you brought Bitcoin when it was 70,000 or 104,000, you're sitting on a very handsome gain right now, okay? So it doesn't matter. But the practice says that if investors are still going to retain their Bitcoin because they want to sell it, it means the expectation of Bitcoin's price to go higher in the future is massively improved, because there is expectation that people are interested in selling the Bitcoin. And that equally, they will then increase the value of this to get to that 1.35 point by the principle of this chart. And then, of course, you'll see Bitcoin make the move higher. Maybe this crypto bill will trigger that. But I also believe that why Bitcoin could be a sell the news event is because the real money, in my opinion, based on these crypto bills, it's going to go into stock. I really believe it's going to go into stock, especially Circle. That's what I think is going to happen. It's going to be one of those, you know? Anyway, let's just go and pay attention to something. I mean, wonderful, eh? This is a very good investment, ladies and gentlemen. And whoever's been telling you otherwise, just, he's a madman. Honestly, like, it's been on my radar for quite some time. You know, good old XRP. And you know, if you've been selling it as I've been telling you to, I hope you haven't. Well, I've been buying it, but it's been an interesting ride to the upside. But guess what? Don't worry, it will come back. All right? I'm just having my day here right now. I'm enjoying this. But it will come back. Why? Because this asset is a bullshit asset. It really is. It works on the principle of an electrocardiogram, okay? It always does what? It does this. Up and down, up and down. This is the ECG, not XRP. It's ECG. All right. I'm going to demand. Can you guys do your thing on the internet and demand that this ticker gets changed for ECG, not XRP? Because it does behave like it's got tachycardia or bradycardia, whatever. Like tachycardia, should I say? It just goes up and down. So there's your expansion, there's your heartbeat, and then it's just going to come back down again. This is your abnormal behavior, because it's going to come back down, and it's so sad. I just need it to go a little bit more higher so that the comeback down is a little bit more easily absorbed, so that I can just be like, quickly get it out of that ledger and that ledger and that ledger, and then we made a bit of cash. All right? So please go and do your thing, ladies and gentlemen. Yeah, I'm serious. You think I'm joking? Straight to $5, he says. Man, this thing is not going to $5. Look, every time I say it's not going to go somewhere, it ends up going. So it's not going. It's not going to go to $100. It's not going to go to 589. Where they got that number from? But hold on. Saylor said that Bitcoin market cap can go to 500 trillion. So whenever you guys do the math on whether a coin can go to a specific price, you get people saying, oh, it's impossible to get to that price. Impossible. It would mean that the market cap alone for it would end up being something stupid like 190 trillion. Well, Nvidia's going up. It's already at 4 trillion. And that's just a stock in one sector. Now, treasury holdings. Once you start putting Bitcoin in your balance sheets, ladies and gentlemen, you got yourself a very interesting story. The only time Bitcoin will effectively become a store of value when it gets so flipping expensive. And I'll show this to anybody that is new to the live stream. Okay, look at this. $707,681 a share. Warren Buffett's company, Berkshire Hathaway. Okay, that there, ladies and gentlemen, is a store of value, in my opinion. Right? One share, nearly $750,000. Average daily volume is 300 shares. They're buying and selling this, right? And they tell each other too. Hedge fund manager could be cut. I mean, how many hedge fund managers are holding this stock? Wait, 242 hedge fund managers are playing this stock, right? So they'll be like, yo, listen, I'm going to get rid of some shares today. How many are you getting rid of, bro? 5. What? But that could ruin the price. No, don't worry, man. Got a buyer. As long as you got a buyer, then we're good, man. We're good. 5 shares. I mean, come on. That's a little bit too much. Don't worry about it. It's Berkshire Hathaway, man. That's how it is. It's a store of value, you know? That's what Bitcoin will end up becoming, ladies and gentlemen. Okay? Now, quickly going into the open, ladies and gentlemen. Jokes aside, just quickly going over and have a look at other things. I mean, Solana's been doing wonderful. We got Ethereum that won't stop. Does anybody remember back in the day when Ethereum broke the $1,800 mark and it just never stopped going up and claimed the all-time high of around $4,500, $5,000? Do you remember that? This could be it, which makes me then give you the idea that maybe we could be going into the altcoin season. Quickly put it into perspective for my altcoin holders. This is what you need to be mindful of. There are a number of altcoins right now that are popping up. What you've got to look out for is the altcoins that are just about to come away from the moving average on the daily time frame. You need to look for an altcoin or a group of altcoins that are coming away from the 50 EMA. This is the total market cap for the majority of the altcoins. But this chart doesn't give you the altcoins that are not moving away like this on the 50 EMA. Those coins that are just about to break, when this retraces, those in principle will then start to come away from it in its rotation, okay? Because people ain't going to want to be buying at these premiums. They're going to want to buy at discounts. So equally, this is what you're looking for. Imagine you've got, here is the 50 EMA, right? And here is price for an asset. Let's call it ECG, all right? And ECG has been trading like this, and it's just still inside of this range right here to try and break the 50 EMA, okay? What happens is the total market cap then starts to pull back, okay? Whilst that's pulling back, logic says that this stock right here, okay, is going to, well, this ticker here, this XCG, ECG, then starts to consolidate around the 50 EMA, okay? So then that means 50 EMA is doing this. Then, once price of the total market cap stabilizes and then starts to show the possibility of coming back up, it's this stock right here, ECG, that's going to be the one that breaks out aggressively. Why? Because there is a number of other altcoins that have already done it. So the ones that are still accumulating are preparing for the next run. And when you focus on enough altcoins, you'll start to see it, ladies and gentlemen. You know? Quickly just going into a few altcoins just to see if I've got a few examples for you. Okay, here we go. So right now, RSR render token representing the total market cap. Cool. Curve representing the market cap. What are you doing up there, bro? ADA representing the market cap. Super, same story. LRC, here we go. This is coming from a downwards move. Okay, loop ring. It's just broken the 50. But it's not representing the total market cap. So that means that this stock, this asset here, could effectively try retrace to get ready to take the 200 EMA. That's one for you there. Zen, what's it doing? At the 50. It's not representing the true market cap of the altcoins. So that means there could still be more room for this if they do pull back and continue to the upside. Don't focus on the altcoins that are doing this. They've already had the move. They've done it. There's going to now be a bit of a rotation because if you see the total market cap for the altcoins coming down, but you don't see those two assets like Loopring not breaking down, that means there's still an accumulation. They're getting ready for the next bout to make the move to the upside. So if you missed out on XRP, okay, making that big move to the upside, don't worry, ladies and gentlemen, it will be coming back down. I can promise you that because I'm heavily associated in XRP. I've got a couple of guys in Ripple Company that tell me when they're dumping it and when they're not dumping it. And they call me all the time and take the piss. And they say to me, we're going to do it again. And I'm like, please don't. And they're like, we don't care because this is what we do. So, yeah, that's a true story. It's not, well, it could be a true story. But anyways, with that being said, ladies and gentlemen, just a quick one for you. We've got a discount on the Platinum membership. We've been putting out setups all week, and we've been doing really well with the setup, especially in the Asian session. We've currently got a discount code, which is pinned to the top of the chat, which is all-time high, all in uppercase. And you get 20% off your first month when you become a Platinum member. But there's so many other things that you get with it as well. And also you get various PDFs, which are the strategies of the hybrid system that you can utilize when you are trading your everyday. And right now, there's one of them that we're going to be talking about, which is the Brinks box, which I do need to go and get an update out to everyone who is a member already. So if you want to take advantage of that, it's pinned to the top of the chat, discount code. Go and use it. Enjoy the madness over there. And I'll be tuning into you all later on. Don't buy ECG. Internet, do your thing, man. And let's try and get that ticker changed. Mad love and respect. Peace. Nah, man.